So currently an update on my DogeCoin position. Currently it is down $4,916 with 80 cents. So looking at Doge, let's see. So on the 4-hour time chart, the 9-day moving average has crossed above both the 20 and 50-day moving averages. And so what do I see Doge going from here? I see further uptrend from Doge. It needs to break through that 180 and 200-day moving average so we can get back on track of continuing this uptrend. And on the daily chart, it is approaching the 20-day moving average. If it successfully breaks the 20-day moving average, then we can see further uptrend. Let's see, Bitcoin. So on the 4-hour time chart, it looks like Bitcoin is back to normal of being, well, let's see, hold on. Well, here's what I see. So right now, Bitcoin is approaching this previous resistance level around the 107 or 108,000 level. But if it does manage to break that, resistance level, then I do believe then we'll have to approach the next resistance level, which is anywhere in the 109,000 or 110,000 resistance level. That would be the next resistance level that Bitcoin would need to break so we could see further uptrend from Bitcoin. And then on the daily chart, it looks like the 9-day moving average is about to cross over both the 20 and 50-day moving average, but by the looks of it, it looks like that's what's going to happen. So we'll have to see what happens. And just that's pretty much it, really. Just keep an eye on what's going on with the overall crypto market if that's what you're invested in. And basically, what are some stocks that you could keep an eye on for this week? So you use this free website called finviz.com. You click where it says here on screener, click on where it says market cap. I highly suggest this for beginners. Click on mega. Click on where it says performance. Click on where it says perf YTD, and it's going to show you a list of stocks from worst to best. And basically just make your own analysis on whether to play calls or puts, or if you're if you're a long-term investor and you prefer trading stock in these particular stocks, by all means go ahead. Personally, I believe that most of these stocks that are currently oversold will always have to, I wouldn't say always have to, but eventually these oversold stocks will eventually, make a comeback in the potential future. So, let's see. Let's choose a random stock to look and analyze. Let's choose XOM. So let's see what XOM looks like, and we can go from there and observe if it's whether it's playing calls or puts, or if it's a good opportunity to invest in for the long term. So let's say I don't know how to use the 30-minute time chart, right? And I'm only relying on the daily chart, right? So what you could do, right? This is probably the easiest way that you could time your entry points of knowing when to get in, is basically look at the particular stock that you're looking at, look at it on the daily chart, right? And add these moving averages, the 9, the 20, the 50, 180, and 200-day moving averages. From here, you're gonna want to observe if it's if this particular stock, for example, XOM right now, it's gotten rejected by the 180 and 200-day moving average. 3 times already. So this candle right here, this candle right here, and this candle right here, right? So from here, what I could analyze is that XOM currently is having trouble breaking above both of those moving averages, the 180 and 200-day moving average. So what I could do for Monday is I could try to observe XOM if it approaches the 180 or 200-day moving average. Yeah, 200-day moving average. I could play puts, play a little small position. Don't go all heavy in, because you can never know if this analysis that I'm doing could backfire. It, like any technical indicator in the market, everything is like a risk, and so you always have to know when to cut your losses. So, but going back to what I was saying, right? So just play a small position of put options as soon as it approaches, as soon as XOM approaches the 180 or 200-day moving average. And let's say for whatever reason XOM decides to break above both of those moving averages. As soon as you see your position being down 10%, take the loss of 10%, move on to the next trade, and just try to double your percentage target for the next trade. So instead of aiming for a 10% gainer, try to aim for a 20% gainer instead now. So that way you can recoup that previous loss of that 10% loss. So, and let's say that XOM does get rejected by the 180 or 200-day moving average. Now, what you could do is you could, well, let's see, hold on, I don't want to, okay, if you're swing trading this, you could do this, right? You could patiently wait for XOM after getting rejected by the 180 or 200-day moving average to approach the 20-day moving average. Once XOM approaches the 20-day moving average, sell out your position. That's your exit point. That's basically where you want to sell out your position at. Now, let's say it's, you're not feeling confident. You don't think XOM could reach that 20-day moving average. So what you could do is you could use this previous candle, the 626 candle, and basically you see the low reads 108.55. As soon as you see XOM, right, approach the 180 and 200-day moving average, it gets rejected by it. Look out for that number, 108.55, and sell out your position as soon as it reaches that number. That's another way that you can know of when to sell out. That way you're not struggling of, just figuring out if you should sell or you should wait. And that way you're not, I guess like just waiting to see if you should wait and sell. So basically those are two ways of how you could, use, how you can know when to sell out your position at. And you could use, honestly, you can use the daily chart to your advantage. If that's, if you want to trade it simple, try to use the daily chart. Now, if you're, more advanced, then you can use the 30-minute time chart or the 4-hour time chart. But I highly suggest, sticking to the 30-minute time chart and adding these moving averages, which are the 9, 20, 50, 180, and 200-day moving average. So that's how I would play XOM if it does, decide to approach the 180 or 200-day moving average. I would play puts. Now, if it were to surpass that, those moving averages, as soon as I see my position being down 10%, I'll take the 10% loss and just move on to the next trade and try to double my next trade of making, instead of a 10% gainer, I'll have to make a 20% gainer now. So that is pretty much it. This is not financial advice. As always, take care and bye.